Hey, welcome to Investellic. Let's be real for a second. What's worse than losing money in the market? Easy. Making money and watching a chunk of it vanish to taxes. Today is August 4th, 2025. And in this video, I'm going to walk you through the smartest, most legal, and up-to-date ways to avoid taxes on your investment gains. No offshore nonsense, no gray area loopholes, just battle-tested, IRS-compliant strategies that the rich have used for decades and still use today. By the end of this video, you'll know how to keep more of your profit, structure your portfolio like a strategist, and play offense, not defense, with your taxes. Let's get started. Section 1. Why taxes are the real threat. Everyone talks about beating inflation, picking the next Tesla, or timing the market. But let's be honest, taxes are the real silent killer. You might make 15% in a year, but give 30 to 40% of that to the government. Over time, that's death by 1,000 cuts. And in 2025, with higher surveillance, surtaxes, and state-level levies, tax planning is more important than ever. Section 2. Capital Gains. 101. What you need to know in 2025. Here's a quick breakdown of how capital gains are taxed in the US as of today. Short-term gains, under 1 year. Tax-like income, up to 37%. Long-term gains, over 1 year. Taxed at 0%, 15%, or 20% depending on your income. Plus, net investment income tax, NIIT, plus 3.8% for high earners. State income tax, if you're in New York or California, add another 10% or more. In short, the more you make, the more they take. Section 3. Strategy 1. Hold long term. The easiest way to lower your taxes: hold. Holding your investments for more than a year drops your tax rate significantly. Even better, if your income is under a certain threshold, you may pay 0 in capital gains tax. In 2025, the long-term capital gains exemption starts at $44,625 for individuals. So yeah, buy great assets and don't sell them every time your emotions panic. Section 4. Strategy 2. Use tax-advantaged accounts. Still gold in 2025. Tax laws shift over time, but Roth IRAs and 401ks remain powerful. Roth IRA, tax-free growth, tax-free withdrawals. 401k, lower your taxable income today, pay later, likely at a lower rate. HSA, triple tax benefit, contribution, growth, and withdrawal can all be tax-free. Even in 2025, these tools are still essential for long-term tax protection. Section 5. Strategy 3. Tax loss harvesting, perfected by AI traders. Here's how the pros, and increasingly AI bots, reduce taxes. They sell losers to cancel out winners. Example: you made $5,000 on Apple. You lost $5,000 on Coinbase. You sell both. Your net gain equals 0. No taxes owed. Wash sale rule still applies in 2025. So don't repurchase the same asset within 30 days. But you can buy similar ones to stay in the game. Section 6. Strategy 4. Use deductions smartly. Still legal, still powerful. In 2025, if you run a business, invest in real estate, donate to charity, use home office expenses, or leverage depreciation, you can offset major portions of your taxable investment gains. Pair this with capital gains, and you're building a defensive tax wall. Section 7. Strategy 5. Donate appreciated assets. Don't sell your winning stocks just to donate cash. Donate the stock itself, you skip the capital gains tax, and get a full deduction for its fair market value. This strategy is especially useful in 2025. as charitable giving thresholds and deduction caps are still in your favor under current IRS policy. Section 8. Strategy 6. Relocate to a no-tax state. Florida, Texas, Nevada, Wyoming, and others still don't tax income in 2025. If you're planning a big asset sale and you live in California or New York, consider this. A simple relocation could save you 6 or 7 figures, but don't fake it. You must legally establish residency. Section 9. Strategy. 7. Borrow against assets instead of selling. Want the billionaire trick? Own assets. Don't sell them, borrow against them. In 2025, asset-backed lending is more accessible than ever. Banks and fintechs are giving margin loans, stock-backed credit lines, and even real estate collateralized lending at competitive rates. You pay no taxes, keep your investment exposure, use the cash as leverage. Power move, plain and simple. Section 10. Strategy. 8. The step-up in basis still exists. Despite legislative pressure, the step-up in basis rule remains active in 2025. This means if you pass away holding appreciated assets, your heirs receive them at today's market value. No backdated capital gains, no massive tax bill for your kids. It's the ultimate wealth transfer trick, and still very real as of August 2025. Let's recap. In 2025, if you want to legally avoid taxes on your investment gains, here's what works. Hold long-term, use tax-advantaged accounts, harvest losses, leverage deductions, donate appreciated assets, move strategically, borrow instead of sell, use step-up in basis for legacy planning. And remember, these strategies aren't just for the rich. They're for anyone who's willing to think like the rich. Subscribe for more advanced investing tactics. Leave a comment with the strategy that blew your mind. And always talk to a licensed tax professional before implementing anything. This is Investellic, where your money learns how to defend itself.